Good morning, traders. It is Sunday, March 3rd. It's time for our weekly video. As always, I want to start off with my previous picks. I'm going to try and keep this video somewhere in the half an hour range, 35 minutes. Got a lot of information to cover, so let's get started. This is how you can tell how effective our trading methodology is. Every single video starts off with a review of our previous picks. So, ARM, I was using a strategy where we were selling a diagonal spread, selling the near-term options, buying a much further out option. We were using puts. The objective was to simply have the weekly options expire worthless, and we were selling our short-term puts, the weekly puts, which expired right below the support level here, this AVWAP-E. That was a nice trade. Another one that I showed you was NET. We used a similar strategy on that. The premise was we were looking for the market to stay sideways. We were not looking for a market breakout, which we actually did get a nice breakout on Friday. So while we were in this holding pattern, this pause, we were going to be trying to take advantage of accelerated time premium decay. The option implied volatilities in the tech sector are also very elevated, so that's why I chose that particular sector. Plus, those stocks have had really nice support. The downside to it is that we don't want the stocks to really rocket higher, to take off, because that would not be good for the strategy. So, given the market breakout on Friday, it was time to unwind those positions, but they were both profitable. NET, we were selling a $97 put, and we're buying a $95 put out in May. That was a really nice position. Made decent money. McDonald's, MCD. There I liked selling an out-of-the-money bullish put spread, keying off of this 290 support level, which is AVWAP-E. So we sold the 290, 287.50 puts that will expire a week, and not in a week, it'll expire this Friday. So that's a spread that we put on for a 50-cent credit. You can see how McDonald's has not actually performed as I would have preferred. The stock has continued to pull back. It had a dividend that was payable. It went X on the 29th. So some of that price adjustment has been reflected in the stock. I'm expecting it to bounce off of this AVWAP-E. You can see 290 is our short strike price. So this week, tick, tick, tick. I'm expecting this spread to expire worthless, and I'm expecting the stock to move higher. So no reason to panic out of the spread. We've got a week left until expiration. Stock is finding support at AVWAP-E. That's why we selected that strike price. So yes, I'm looking for a little upward movement over the course of the next few days, and that'll give us some decent distance from our short strike price. You can see McDonald's is a choppy stock. It moves back and forth, and it is also going to find support here because this is the lower end of a horizontal support level that you can see visually. Touches many places along the line. So the more support levels we can have when we sell out of the money puts, the better. So I still like MCD. During our live event Wednesday, I highlighted JPM. Really like this stock. You can see it's not a fast mover, but I wanted to get out of the tech sector because I've highlighted so many dang tech stocks. So if you're going to trade from the long side, and we'll get into this shortly, you want to be in tech. But I feel you need to keep your trades short term in tech also, because if the market does hit a snag, you're going to see some profit taking in that sector. So JPM was a nice pick because it has just consistently been able to float higher. People have jobs, which this week we're going to get the jobs report. They should be excellent based on what I've seen in initial jobless claims for the last 4 weeks. So you can see how the stock has performed well. This is the Wednesday live event, and the stock has been able to move higher. So that also looks like a really nice trade. VKTX is one that I highlighted not too long ago, about 2 weeks ago. And that stock Man, was that a nice blow off rally here because they have a new weight loss drug, went through mid stage clinical trials with extremely good success, but that stock jumped about 50% in one day. Would I buy it here? Well, it's able to hold this gap, so this looks pretty good. But again, the stock is benefiting from that news, but the drug has yet to be approved. So I would expect it to just kind of go sideways, and I don't know that I would take a position in it here. I want to see it digest some of this news in here, and some of this excitement is likely to wane. So no, I wouldn't be chasing it in here, but in here we could see that gradual drift higher. Sure, I loved it in here. So let's take a look at the market. See what the market's doing. I'm going to try and give you some insights on why I'm currently trading the way that I am. And we'll go into the daily chart of the S&P 500 first, and you can see how the price action, this is where we started taking gains on our longer term swings. We were long in here, rode this move very, very hard, had no dips at all, just a compression and then another leg higher. Well, in here, we got the FOMC statement. We had major mega cap tech earnings coming out. We had major economic releases coming out. So this is a good place for us to take our positions off and to evaluate what was going to be happening with the market, especially after such a big run. And I also felt that we'd be able to catch the remaining move higher with day trades. And that's the mode that we've been in. If by chance this news came out and we had a negative reaction, we were in cash. So we had major flexibility to do whatever the market was telling us. So if the pullback was very steep and deep, then we would have been able to hold off on long positions, wait for that support, and then consider getting long. But this price action right in here tells me that we are going higher. Were we going to go higher right here? Didn't know. We wanted to evaluate the dip, the depth and duration of the dip. That would tell us how much higher we were going to go. Given that we didn't have a dip, that was a very bullish sign. So now you can see the price action here is getting a bit tired. We're starting to get more of these gaps. The price action is looser, so you get a gap up and then you get a gap down, and now you try and take out the high, you retrace, now you get a gap up. So very choppy price action. Intraday, the volume has not been good until Thursday and Friday. We started to see some decent volume. A lot of that was end of month, beginning of the month buying. But yes, we started to pick up a little bit of volume and we broke out to a new all-time high. But in here, the price action was very, very lackluster. There was nothing going on most days. You can see the tiny bodied candles. Those are a sign that we're not doing much on an intraday basis. So this is a good time to not have a lot of risk exposure. Focus more from a swing standpoint on option premium selling strategies. Try and take advantage of that accelerated time decay. ARM, NET, MCD, all great examples of that style of trading. So I'll try and take a look at a couple of examples like that as well. And when you're setting up your trading, it's very important to look ahead and to see what possible speed bumps there might be for a breakout like this. So as I look forward, this week we're going to have a lot of economic releases. We had hardly any last week of any importance. We had GDP, but that was our second look at it. The PCE, that was our second look at it. Pretty much came in line. So this week, though, we have ADP, ISM manufacturing, ISM services. We have the big report, which is the jobs report on Friday. Now, everything I've seen to this point tells me that the job scene's still going to be very good. 200,000 new jobs probably in line with expectations. We should see that. The most important part of that jobs report is going to be that wage component, that hourly wage component. It came out at 0.6% a month ago. That is a very hot number. The market was able to shrug it off, but that is a huge source of inflation because wages are the largest input cost for manufacturers. So it is inflationary. So hopefully it'll come down to maybe 0.3% this week, and I think that we are going to see a decrease in it. Why? Well, in January, a lot of states increased their minimum wage. Illinois, for example, where I live, increased the minimum wage. Well, that's going to put upward pressure on those hourly wages. Now that that news is out, we won't see the same level of increase that we saw a month ago. So I think the jobs number is going to be good. It's going to be market friendly. I think the wage component's going to come in. That'll also be market friendly. All the other economic data points should be solid this week. As I look out a little bit further, we've got an FOMC statement coming out in 2 weeks. Is that a big deal? Well, I'll tell you, it's going to be a splash of cold water. And you can see this was a FOMC reaction right in here. It's just a reminder to the market that, hey, folks, we're not going to cut rates anytime soon. Inflation is still persistent. We have great economic growth. So we don't have a need to start cutting interest rates. So from my perspective, this market rally continues as long as our economic numbers continue to be strong. Some of the biggest market rallies we've seen in the last 50 years have come when interest rates are elevated, and even in some cases when they're still rising because the economic backdrop is so strong. I'm a little bit cautious in here because the US is really the best game in town. We're not seeing that same economic growth in Europe. We're not seeing it in Japan. We're not seeing it in China. So we'll see if the US can kind of carry everyone else out of this little economic, I don't know if you'd call it a speed bump, soft patch, I guess would be an appropriate name for it. So up in here, I'm not as aggressively long, and I still feel like I can catch this move day trading. So I'm keeping everything very short term. And so now let's take a look at a 5-minute chart, and I'll explain what I'm talking about. What you need to be careful of in here is that the market has a tendency to keep doing what it's been doing. So on a daily chart, here are my concerns. If you draw an upward sloping trend line here, you can see that it extends right up in this area. There's another trend line right here that I highlighted last week. This is a very tight trading channel. One of the issues that we have to be very careful of right now is a blow-off rally through the upper trend line. That would be a high plus trend line. If we have a long green candle and another monster long green candle, that to me is going to be a big warning sign. That's typically a buying climax, especially when you have a fairly steep upward sloping trading channel. You have to be even more cautious. So you get this blow off rally because there aren't any sellers, and you get a lot of bullish speculation. What causes that big long green candle to roll over and then you get a bearish engulfing candle off of it is that all of a sudden you've got a lot of people who are looking at the gains that they've made recently, and they're very willing to lighten a load, to take some chips off the table. Does that mean they are bearish? No, it does not mean they are bearish. It simply means I'm going to lock in some of the gains. I'm going to take some of my position off with the assumption that I'll be able to re-enter that part of my position at a better level. I'll give you an example. Warren Buffett, he has a huge position in Apple. Well, he recently sold some of his Apple shares. Is that because he's bearish on Apple? No. It's because he feels he's going to be able to repurchase that portion of his shares at a lower price. And when that selling pressure starts, all the bullish speculators who are loaded up and who see this blow off rally and they're like, oh my God, this is 1999. The S&P is going to go up to 700. These guys are going to get flushed out very, very quickly. And so when you get these breakouts and these buying climaxes, the backside can actually be a little bit nasty. And because the rally has been so concentrated to the tech sector, and even within tech, the chip stocks are getting all the action based on AI. So those cannot lead the entire market higher forever. You need broad-based participation. And we're not really seeing that. So that makes the market a little bit more vulnerable as well. So those are the reasons that I'm more cautious in here. Now, I've added a little fundamental news, based on what I just explained, how narrowly based the rally is, the fact that other areas of the world are not having the economic growth that we're having, and how not all the sectors are participating. So yes, it factors into my decision making, but all I really need to do is to look at the price action and see and hear how nice and tight that rally is. And it just unwavering at all. And then we get a little bit of a dip, and that dip is instantly gobbled up with a long green candle, and off we go to the next level. Now it's getting more spotty. Well, this is a sign to be more cautious. So, my perspective, we've got some good economic news coming out this week. I should say I'm expecting good economic news consistent with this market rally. Then we've got the FOMC statement coming up in 2 weeks. So that could be some nervous jitters heading into that. We're likely to see price compressions into these major announcements. So the patterns that I'm looking for are going to be similar to what we've seen. So you get tiny little bodied candles, a little float higher, and then waiting for the big news. And then, okay, now coast is clear. We get another little rally. Same thing here. We get a price compression all week. So I'm expecting Monday, Tuesday, Wednesday. Yeah, there's economic releases coming out, but everybody's going to be waiting for the jobs report. They're going to be waiting to see if this rally that we got last Friday is going to hold, and then the jobs report will come out, and then yes, there's a chance that we have another big up day. So when the market is dipping like this, like we had this week, let's go into an M15 chart so we can see a bunch of days all at once. This is the price action. This is what we saw Monday. Just this steady leak lower. Tuesday, nothing going on. Wednesday, nothing going on. Very sideways type of price action. So from a day trading standpoint, you're looking to let the market show you definite signs of support, and then you would take long positions. If you're a seasoned day trader, yeah, there's some shorts in here you could have actually tried as well. On Wednesday, this is Tuesday, we had a nice little bounce in here. Yeah, there was a nice little closing rally, but then on Wednesday, we didn't do anything. The market just kind of waffled around. So there were opportunities to day trade, but you had to be careful, especially on an inside day with light volume. There's not a lot going on. A gap up, you always have to be careful of. But this was the price action on Thursday. And I had mentioned to everyone, I know that this looks really good, and we took out the previous day's high, but there wasn't any news to justify this big move higher. So look for some retracement. Well, we get this sell-off and the gap fills. This was our entry point for day trading longs because we had this nice bullish hammer off of the low. I can go into the M5 chart and show you that. So let's go back to Wednesday. It was Thursday. we have this gap up, and you can see how we're not moving higher, we're not moving higher. We've got a bearish 1OP cross, we're compressing. The temptation is going to be to try and smack this move down. We'd seen weakness earlier in the week, and then it cracks. Well, this is your bullish hammer right here. Okay, that's nice. We filled the gap. All right, I'm interested now, but until we take out the open of this long red candle, this is where I would start taking long positions. If the market can grind through the VWAP, then I would start adding to positions in here. So the market does lift off a VWAP, everything's good. We get a little check right in here of the VWAP. Nice, we get a long green candle through it. So everything in here is consistent with just stay long. This is a nice little bounce, and we've gotten well into that gap at this stage as well. So stay long. They try and slap the market down. This is a volume bar, meaning that heavy volume on this particular bar. That's why it's color coded. And we get a bullish engulfing candle. That's nice. And then we get a really nice move higher into the close. All right. This is actually a pretty bullish setup, because earlier in the week we've tested support, so they're going to be constant bid checks. So for 3 days we test the bid, we confirm it, test it even a fourth time on Thursday. Now we know there's some solid buying pressure. When we opened up Friday, it's like, okay, well, we had a little gap up. Let's make sure that it holds, which it did. And now we get this long green candle in here. We still have a bearish 1OP cross in here, so we're going to be watching very closely. And as the market continues to march higher in here, we were fairly certain that this was a bullish divergence, which actually confirms the trend strength. And the market had gotten to a new all-time high. All right. This is when you want to start getting fairly aggressive with your bullish day trades. So we continue to march higher. By this stage, with the price action that we had seen where it was nice, steady grind higher, a couple of bid checks along the way that are instantly gobbled up. Here we get this little test almost of the VWAP and this bullish hammer. This is where you can be adding. You got a new breakout to a new high of the day. This is where you can be adding. So in here, you take a position. You see a nice bounce like that above the VWAP. Here you can be adding. You got a breakout to a new high. Here you can be adding. This is when you make your money. Not every day is going to be like this. So you have to know it's much like a blackjack player. He counts the cards. He's keeping his bets very, very small. But when the odds start to line up for him, that is when he puts his money down and bets big. And you had this consistent price action to where now you're pretty loaded up and you just let the market continue to rally, given that the market did not have any major selling into the close. Tells me that we're probably going to open higher Monday. I'm recording this very early Sunday morning. So how can I be so confident? How can I expect the market to open up higher? Well, some people would just say, well, that's because the market made a new high. Of course you're going to open up higher on Monday because you got all this buying pressure. Well, the tell for me is that into the close, if this was all bullish, speculative fluff, there are lots of bulls lined up. Well, if you're doing exactly as I had explained and you've got fairly large day trading long positions on, what are you going to be doing in here? Sell, 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 sell. Not short. You're taking your gains on your day trades. And all of that selling pressure from bullish day traders is being gobbled up by longer term buyers. And you don't get the late day sell-off. So this is why I would be bullish for a move higher on Monday. But I'm expecting fairly light, fairly sideways trading Most of the week, Monday, Tuesday, Wednesday, Thursday, we're waiting for the jobs report, and then boom, Friday, you're going to get your big number. And then we go into another pattern similar to that where we're waiting on the FOMC statement. So uh, you can do some really nice swing trading right now if you're selling some out of the money premium. So that's what we're going to be looking for. And then we're still going to be trying to capture the remaining upside with some long trades, primarily day trading. So I'm going to show you a couple of stocks that look really good from a day trading standpoint. Let's go in and let's take a look at the same WATM strategy that I had shown you earlier. And we're going to look at this list. Again, this is really set up well for selling these diagonal spreads where we're selling weekly at the money puts and we're buying longer term out of the money puts. If you're not in a go-go hot tech sector and you've got stocks that are a little bit more balanced and not moving higher with the same level of momentum, they've been in a flat trading range, ideal type of setup. And so we've got Uber actually sets up pretty well for it, but I'm going to highlight another stock that was in this list, mainly because in this instance, I don't mind selling a naked out of the money put. And here's why I like Lyft, Lyft. So you get this compression right in here. Stock is holding support. It's not really going anywhere. And then it has this earnings announcement and this big lift off, big gap right in here. So you've got horizontal resistance has now become horizontal support. And you'll notice that the stock, even though it's retraced from the high, got a little ahead of itself here. Now it's pulled back. You had some profit takers in there, and that's why after earnings, I like waiting about 8 to 10 days. Let some of this fluff come out of the stock and see what actually happens and how aggressive those buyers are. Now, if they continue to bid the stock up and we're up in here, then you know this stock has got a lot of buying pressure because all the sellers that were looking to take profits, well, there aren't many of them. And the buyers are lined up, and that's what's keeping these gains. That's what's preserving these gains. So now we get this little bit of a pullback. Yeah, it's a considerable pullback from the high, but this is a big move for the stock. It went from $12 to $19. That's a 33% return in a matter of 2 days. So now some of that fluff has been taken out. You can see this horizontal support level at about 1560 that's been able to hold. Would I like to buy the stock at 1560? I would like to buy the stock at 1560. In fact, I'd like to buy it even more right here where it gapped up at a price of $15. I like the price action in Lyft, so I'm going to be selling a naked out of the money put. The last one of these I showed you was on Mara. They expired worthless. There's a really nice percentage gain on that one. I believe somewhere in the 18 percentile in a matter of a couple of weeks. Well, Lyft is not as volatile, so we're going to have to go a little bit further out, and we'll go a month out. We'll go out to the March 28th expiration and see what we can get. We're going to be selling those 1550 puts, and the 1550 puts are bid at 60 cents. So the margin requirement on this is you're going to have to put up roughly 20% of the short strike price. So your short strike price is right in here. So you're going to have to put up somewhere around $3.10 to take this position, but you're going to be paid 60 cents. So that is a healthy return on that investment of about 20% in a month. Okay, so here's the caveat, and here's the mentality that you have to have going into this particular trade. I want to buy Lyft. I want to buy Lyft. I'm going to save half of that strike price in reserve so that if I get assigned the stock, I have enough money to buy it. So it's a very easy strategy. If I get assigned, I'm going to be buying the stock at $14.90. And this should be support. This gap should represent support. And so that support comes into play at $14.90. Okay, this trade makes perfect sense to me. I've got support right here, was horizontal resistance, now horizontal support. That's one level. I've got another level of support here, which is the low from the gap up on earnings. So yes, I'd be a very willing buyer right here. I'm looking for the market to go sideways to a large degree with a couple of spurts higher. So looking for this same price action that we've seen to continue. So you get a little spurt higher, and then you got price compression. You get a little spurt higher, and then you've got price compression. So on every one of these moves, if I'm selling premium, that's fine because those options are going to expire worthless. I don't have to take a lot of longer term risk exposure. I can wait for those opportunities to set up, just like the one that we had on Friday. And when I get into these bullish trend days and I start to see them unfold and the market's starting to push higher to a new all-time high, I can start to really leverage that position without taking a lot of overnight risk. So that's how I would be playing the market right now. Everything seems to be intact. Again, I've got a little bit of caution on longer term swing trades because the participation has not been fantastic across all sectors. We don't have global economies growing at a fast pace. Japan's in a recession. Europe narrowly escaped a recession. China is just, they've got some awful stuff that they're going to have to work through. I don't see anything great coming out of China economically for a very long period of time, years. So, given that backdrop and given the market rally to this point and this patchy price action that we're starting to see up here, I would be a little bit more cautious. And also, if we see that blow off buying Climax in here and you see these long green candles, especially if they get up to about the 520 level on SPY, I'd be very, very cautious. That's when I start looking for that bearish engulfing candle. That's when I start looking for a massive gap up and a gap reversal that is right out of the gate, the first 5 minutes, stacked red candle, long one, another one, another one, another one. That would be a sign of very heavy selling pressure and strong resistance, and that would tell me that the highs are probably in for at least the next month or two, and that the backside could see a pretty heavy dose of profit taking. Until we see that, if the market just continues to do what it's doing right now, this upper trend line is going to continue to extend higher and it's going to move away from price. So if we continue to just compress, move higher, compress, move higher, compress, move higher, no problem. If this buying Climax, let me be very clear on this, because now everybody's going to be looking for buying Climax, oh my God, is this it? Is this the one? It has to happen in the next week. It has to happen in the next 2 weeks. It cannot happen 2 months from now. That's not a buying Climax, because this type of float higher can continue for a year, okay, as long as that high plus trend line stays intact. As long as you don't see long green candles blowing through the top of it, it's not going to be a buying Climax, okay? It's just going to be a normal grind higher, a normal rally. So I really need to impress that point on you. And as long as we just keep doing this right here, everything's cool, everything's fine. We just kind of stay the course. So that's how things are set up. So let me find you a stock that's got a little bit more meat to it, meaning a stock that I like on a day trading basis. Now I'm going to go into Green Royal Flush. We'll take a look at some of the stocks here. Of course, AVGO. I mean, that's going to be a strong stock. You can see the nice breakout that we had here. This is going to be a good day trading stock. It's got earnings coming up on the 7th, so this week. So be very careful with that, but this is a nice breakout. SMCI was just added to the S&P 500. That stock's going to gap up. AMD, I love that breakout. So NVIDIA, AMD, all your chip stocks. Dell posted a good number, so that broke out very nicely. That's a big monster move for Dell post earnings. So let it settle down for a while before you start taking a position. Make sure that these gains are preserved. AMD, we'll take a quick look at that. So yeah, I mean, these are the stocks that are getting all of the AI action right now, all of the excitement. So yes, you obviously want to be trading these chip stocks from a day trading standpoint. So if you're going to take these long day trades, you're going to get aggressive on a bullish trend day, these are your stocks. You can see the big breakouts, the momentum, the heavy volume, and you're not taking longer term positions on these stocks. Meta actually looks really good too. But here you can see it's not making the same type of move as the other stocks are. It's making a nice steady grind higher. And it's really one of the better performers. Microsoft, out of the big cap tech names, look, Microsoft hasn't done a whole lot. Apple, I mentioned earlier, Apple looks actually pretty bearish, and that was a short that I highlighted back in here during one of the live events. Ooh, I got to make sure and mention that news. Google, not doing much. So even the participation in the mega cap tech area is not phenomenal. It's all these chip makers. That's what's getting the action right now. We are seeing a little bit of rotation too into some of the heavy equipment manufacturers like Caterpillar and such. So that's a good sign. I like to see rotation into those areas. I'd love to see some rotation into the transportation sector because that would tell me that the demand for goods is increasing, but we're not really seeing that quite yet either. So Meta, I like, but stick with your chip stocks. Those are the momentum stocks right now. That's what's carrying the market higher. Meta looks like it's good too. Netflix I've been highlighting recently because it's out of that chip sector. It is a tech stock, and I like that. It's actually moved up very nicely. Let me bring that up. That's another stock that you can take a look at. You can see how it had a big day Friday, kind of compress, and then boom, it gets its move higher. Same thing here, compress, move higher, follow through. Now it's going to compress for a while, move higher. You'll probably get some follow through on that this week as well. I almost forgot to mention live events. We do the live events on Wednesday, but this Tuesday, we're going to be doing a live event for members only, and it's going to be on Option Stalker Pro. We want to answer all the questions on all the new features that we have put into Option Stalker Pro. And so for those of you who've been using the software, please be ready with those questions. We'll try and get to all of them. And then we will post that recording from the live event to my YouTube channel also. So make sure that little tab on my YouTube channel, check that live event. So we'll have that posted there. You'll be able to check out some of the features that we've included in Option Stalker Pro. It makes trading so much easier. There's so many features that we've added. It's easier to find these really, really strong stocks. And then it's very easy to set alerts so that intraday we can tell when these stocks are performing well. Helps us identify better entry points, reduce FOMO. So please watch that recording and then join us Wednesday for the live event. We're going to be looking at all sorts of stocks, highlighting some great picks, as well as providing you with lots of educational lessons. Thanks so much for watching, everyone. Good luck with your trading. Look for fairly flat action and then a big reaction on Friday to the jobs report. We will see you Tuesday night. If not then, Wednesday. Thanks. Trade well.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.